Good morning, good evening, and good afternoon wherever you are watching this. Markets are set to close in about 2 hours here, so I'm going to recap on what happened today. From the Japanese yen, bond yields, and crypto having a very rough start to the week, I'll go ahead and recap on it all. And if you stick around to the end of the video, I'll share my current active positions. So let's get right into it. So we'll go ahead and start with Bitcoin. Well, not just Bitcoin, cryptos in general. Starting off the week very rough here. You got Bitcoin down 7%, and the big names Ethereum, XRP, BNB, Solana, all down about 9%, give or take. It's been a rough start for Bitcoin. Actually, if we pull up the Bitcoin chart, you'll kind of see what's going on with it. If we just move to the weekly time frame, Bitcoin is now kind of chugging lower here. If we break these lows again, the 80,000 mark, then we will probably have room to continue lower. Something like this would be a support zone. If we even stretch it down left here, maybe move it down, give or take, something like this. But this is what I would be looking at for Bitcoin. Now, I don't actively trade Bitcoin, but it is an asset that is very important to financial markets. Now, the reason behind the move is a little bit more deeper than just cryptos. Basically, what we had last night, Ueda, hope I'm pronouncing that correctly here, had a speech. And in the speech, he was addressing fiscal policy, interest rates for the Bank of Japan. Now, they have two things that they're fighting, right? They have inflationary pressures from tariffs and actual inflation itself. And the BOJ member said they will consider the pros and cons of raising policy interest rates. So that went ahead and triggered some price action to the Japanese yen. Dollar yen took a little bit of a fall here, so that's good for my position. It went down to 0.80, but now we're kind of chugging at 0.47, 0.50, give or take here. And if you just go down into the hourly time frame, it's probably just a pullback, continuation lower. We'll see what happens there. Now, the big thing that happened though would be the Japanese bond yields. If we just look for the 10-year yield in Japan, we went ahead and spiked down to 1.80. Now, why did that trigger a fall into cryptos? Well, Japan, or the Japanese yen, is a very inexpensive currency to borrow. So what investors usually do when a currency is inexpensive is they go to that currency and they borrow money from it, right? Because it's cheap to finance, and then they go ahead and move money into the assets like cryptos. And so that's what basically triggers a carry trade unwind or an unwind in speculative investments. Leverage money has to pull out, right? And so that's what happened with cryptos. Japanese yen, very inexpensive currency. A lot of investors, were really participating in this bull run. And so when you see price action like this, what usually happens is money gets pulled out of that, and so that is reflected in the chart. So perhaps if we continue to see the Bank of Japan raise their interest rates, borrowing costs become more expensive for the yen, we might see a more deeper retracement. But first, we have to see what happens to this 70,000 level. For the DXY, not much happened here, so we did continue to pull back, not quite at the 31.8 retracement level. If I just pull this fib out from here to here, not quite. We still have some room to go. We'll see if this continues upwards or we continue ranging, but that is my thoughts on the DXY. Ultimately, trying to see what happens if we get to this 38.2% retracement, or even deeper at the 50 or the 61.8. That's where I'm ultimately looking to pick up some dollar. I am short-term bearish dollar, long-term bullish on the dollar. The reason being is because the US is actually doing pretty well, right? Relative to other currencies. Trading currencies is a very relative game. You're trading two currencies, not just the one isolated currency. So when you look at the dollar versus other peers, the dollar is actually doing pretty well. The only thing that makes me very short-term bearish on it is that, we have this rate cut in December, potential further easing into the end of the year going into 2026. A lot of it has to do is because we are getting a dovish Fed member appointed right after Jerome Powell is about to be released from his duties, or his term is about to end. There it is. A1 Trading went ahead and posted Kevin Hassett here emerging as the front runner for the Federal Reserve chair. Markets are forward thinking in the sense that they might go ahead and price in further rate cuts. So that is why I am short-term bearish on the dollar, long-term bullish. So if we get down to this, this level here, the 61.8 or even the 96 level, this has been a good floor in the past, right? If I pull up the weekly time frame, we bounced off here once, twice. So if we do end up in this territory again, that would be a pretty solid risk to reward trade to even target, this previous resistance or higher, depending on what the fundamental outlook landscape looks like. For equities, they did drop a little bit, but it seems like they are recovering here on the day. Not too much happened there. The Nasdaq doing okay. The S&P 500 doing okay as well. What would have happened here? I think what I was looking for is, if it was going to continue being bearish, was more of a right shoulder type situation, continue flushing lower, break retest going down there. That didn't happen. It seems like the bulls really took place here. And if it was going to be bearish, something like this with the fib level here, if we just kind of went maybe like this, or like this, that didn't really happen, right? That 61.8% level didn't even hold. So we did trade, more up into that. That's a very ugly drawing, but you get the picture here. And so now I think that, especially with interest rates coming down, that is probable cause for the S&P 500 and other equities to continue higher. And if you just look at the overall health of the US economy, it's not looking too shabby, right? You have job data doing pretty well here. We're going to get the rest of the PMIs this week, so I'll cover that as well. Retail sales, not too well. I mean, it was a slight miss here. I'm curious to see what the Black Friday numbers are going to look like, right? That'll be a really good gauge, some insight as to how the consumer is doing in an event like Black Friday, where typically, historically, they tend to spend some money. So the US is doing pretty well. That's why I'm pretty optimistic about equities and longer term dollar bullishness. And so that's why I'm not really going to be overly bearish. In fact, I'm going to be cautiously bearish on the US dollar. To kind of touch base on my current trades here, New Zealand dollar doing all right. I'm still in profit. This daily candle, I'm curious to see how the next one opens and continues. I might just lock in some profits and move on. Dollar yen, again, it traded lower down up to like 0.80, and now we are pulling back a little bit. I'm going to see if it continues to pull back further, or if this is just a quick pullback and a continuation to the downside. And that's a wrap on today's trading day. Thank you guys so much for watching. Have a blessed rest of your day, and as always, trade safely.